there was 11.5 billion in global sales from merchants. So again, that's a 24% increase versus 2023. What's the gross profit per order I need to generate in order for me to not only generate enough profit on a per order basis that kind of filters up overall, but gives me enough space to spend on the ad. If they're going to be more transactional, discount driven, then again, as we said, you can't rely on them actually coming back to the same extent. Hey folks, Karl O'Brien, co-founder of StoreHero here, back with the StoreHero podcast for a quick recap of BFCM 2024. A couple of days out, and we want to kind of bring you a short episode with some kind of rapid fire, both kind of insights as to what happened and also some tactics to not only bring forward to the end of the year, but actually set ourselves up for 2025, I should say. Yeah, so I suppose first and foremost, there was kind of mixed expectation, I suppose, as to what the year would look like. Everyone was kind of operating from a little bit of an unusual position whereby the kind of Black Friday itself was taking place a week later on the 29th versus the 24th. So that had a couple of repercussions in terms of consumer behavior. But all things considered, based on the Shopify data that's been published in the last 24 hours, there was a solid performance globally. So obviously, I think like everything, to be honest, like an election, like any macro trend, people can often maybe get too held up in it and not realize that they're probably the biggest lever in their own success versus any other kind of macro trends. But certainly as stores grow, it is a good indication and something to take into account as it becomes more and more, I suppose, impactful over time. So to take a look at some of the kind of key metrics here released from Shopify, we can see that there was 11.5 billion in global sales from merchants. So again, that's a 24% increase versus 2023. We did an interesting poll both internally and externally on our LinkedIn. And with that in mind, I think the expectations were maybe not as high as that. I think of a funny feeling that that's the same thing that happened last year. I think you can see this even with quarterly earnings calls, as is, I'm sure, kind of public markets behavior. People will tend to kind of understate their expected results just to give them a chance to kind of beat expectations with that in mind. And I think Shopify has definitely done that in the past, and also done so not only by maybe being setting reasonable expectation, but outperforming whatever expectation they do set. They're really, they have an insurmountable lead. Some might say, or at least that's the way it looks from our perspective. So yeah, I think practically from there, Shopify is becoming such a critical part of the e-commerce ecosystem, even at that enterprise level. There's naturally that balance between the kind of purported kind of first sale Shopify metrics, which obviously from a lowering the kind of foot in the door, the cost to entry for an e-commerce brand, that is generally something you want to focus on. But at the same time, there has been a significant shift internally to focus more on those kind of enterprise customers, and they brought some big names to the platform over the last 12 months. But nonetheless, that is definitely something that they want to celebrate on that kind of lower tier side as well. Ultimately, in terms of categories, there's no real surprises here, to be honest. It's very representative of what we see every year: clothing, cosmetics, fitness, nutrition, activewear, stuff like that. On an average cart price, they didn't kind of give a proper clear indication here of kind of year-on-year performance. Looking at some of the Klaviyo metrics, personally, I'd say the AOV looks to be largely kind of on a percentage basis, pretty much in line with inflation. So it doesn't necessarily look like people are making the decision to purchase to any greater extent, as far as I can see. What it looks like is that prices naturally have adjusted upwards to a certain percentage, and ultimately that's just captured in a higher average order value. One piece that will be interesting to kind of capture, both in terms of the AOV, is how kind of free shipping thresholds have changed over the last 12 months. As there's been more of a push towards kind of profitable growth and not growth at all costs. Things like hidden costs or hidden discounting, like free shipping thresholds, which could represent a significant percentage of that AOV for brands with a smaller AOV and a meaningful percentage of profit either way. Again, that's going to be something that if people are maybe looking to maybe reassess that, that's something that was affected to a greater extent. I know in certain situations across brands across the StoreHero platform, hundreds of brands in about 15 countries at this stage, we did see some of those trends whereby purchase behavior in terms of kind of product revenue was actually down marginally, but people maybe are kind of somewhat more inclined to make sure that shipping isn't as much of a cost center as it maybe has been in previous years. Naturally, we are seeing kind of a little bit of a skewed sample size for businesses who are making the decision to maybe opt towards more profitable growth, or certainly getting better clarity on their profitability as they maintain aggressive growth. So again, it's a small piece of the overall pie, but an interesting slice of the pie to look at nonetheless. So countries and cities, again, this is going to be largely driven, largely expected, I should say. And then I think another important point is Shop Pay in terms of year-on-year sales increase. For people that aren't familiar, that's built on the Stripe network in Irish business. Ultimately, the advantage there should show up in terms of conversion rates. So ultimately, it'd be interesting, especially as a merchant, taking a look at your kind of AOVs versus conversion rates year on year. Was it a situation there where we allowed ourselves to take advantage of some of that kind of consolidation, whereby, in terms of a kind of a from a customer data perspective, whereby they have those details saved. It's going to ideally make that kind of checkout rate, even a specific portion of the conversion rate, be a little bit more seamless, I suppose. So yeah, a couple of insights there to take a look at. Looking at some of the other kind of trends, you have the likes of Klaviyo delivering some impressive kind of reports. You also have the likes of Flexport, a global fulfillment and logistics provider who kind of manage shipping and shipment details and at a very large scale globally. Again, all leaning towards similar kind of macro trends, I suppose. So to kind of bring it down to earth a little bit as to what we actually saw across the merchants we're working with, again, that kind of a more profit-oriented sample size. One of them is naturally going to be that more kind of profit-driven insights. So I think ultimately, as certainly at some of the events we've ran over the last couple of months, one consistent theme we would get from panelists as soon as it was permissible to start talking about Black Friday without getting a shoe thrown at you, was that, okay, well, realistically, we're not discounting at all costs here. I think there was a big exercise done probably in the last couple of months whereby people looked at those 2023 data. What did those November, December customers do for me over time? Oftentimes we would see, as part of our kind of LTV cohorts piece, situations whereby the kind of gross profit per new customer might have been around the same, because you're kind of doing more discounting, but you're also doing bundling. So, and kind of promotions that maybe encourage a higher AOV. So the profit per order actually might have been relatively sustainable and consistent. But those customers were more discount driven, and ultimately they didn't necessarily come back over time to the same extent. What you don't want to be is a brand who ultimately, over the course of Black Friday, Cyber Monday, November, December, as a kind of a category of the year, which obviously represents 2 out of 12 months of the year, but represents more of a percentage of revenue for most people. You don't want to necessarily be relying on those people to come back, at least relying on them to the same extent. Even if you have those good numbers, there's a cash flow implication of not being profitable on that first order. And ultimately, again, if they're going to be more transactional, discount driven, then again, as we said, you can't rely on them actually coming back to the same extent. So again, being very clear as to what discounts I'm willing to do and not do. I think there's certainly much more of a trend these days, as far as we can see, of a clear differentiation between the kind of discounting and offers driven from repeat customers versus new. They need to fulfill very different functions. And I think when people get into kind of multi-channel segmentation and kind of multi-layered segmentation in general of your customer base, you're looking at, okay, people who purchased last year never purchased before, all my cumulative Black Friday customers from the last couple of years. It can get very confusing and a bit overwhelming, especially for a brand who's maybe below that kind of 5 to 10 million range. And ultimately, there's only so many hours in the day to actually facilitate that kind of stuff. So ultimately, I think those are the kind of two clear segments you should look at. Again, they behave in different ways. You reach them through different channels. And ultimately, if there's an opportunity there to say, well, I want to reward my VIPs, in terms of VIP as a general category of kind of campaigns and promotions for repeat customers, that's something we saw a lot more. And then from there, in terms of new customers, practically there's people sitting on the fence that Black Friday lowers that fence a little bit to kind of encourage them to kind of get over the line. And again, all through the lens of promotions. There's promotions that you want to maybe do for new customers that you don't want to do for repeats, and vice versa. So oftentimes with new, ultimately what we did see is people looking at, okay, well, realistically, if I'm going to have a less of a profit on my first order because I'm doing more discounting, I need my customer acquisition cost to fall as well. So again, I'm generating less profit on the first order, of less profit to be able to afford the ad cost. If my ad cost goes down, because ultimately we're seeing that kind of general trend across a larger propensity to spend, that's great. The worst case scenario is, okay, we're generating less profit, but we're still paying the same amount, if not more, to our acquired customer because we're scaling spend. So again, we want to avoid that. And ideally a promotion that focuses on reducing that barrier to entry for new customers is a nice way to approach it. And again, you have does your offer ideally maintain as much of that gross profit as possible, but by reducing the CPA or vice versa. And then on the repeat side, secondly, I think ultimately what we often want to look at there is to say, okay, if we're either getting people to come back that wouldn't have come back in a reasonable period of time. So again, there may be a customer based on repurchase behavior, you're not expecting to hear from them for a while, or your data proves that you don't tend to hear from them for a while. Or alternatively, people who are regular customers that you might want to expand into different SKUs and cross-selling and stuff like that. Ideally, what you don't want to do is have a situation there whereby customers who would have purchased in January to March anyway next year use this as an opportunity to kind of like just bulk up on purchases at a lower gross profit, because in that case you might try to balance it and say, have I just stolen sales from my new year kind of Q1, and with that in mind, does it actually serve me well as a business if we look at a longer date range or time horizon? So again, if it's a case where somebody has an opportunity to purchase something they wouldn't otherwise, that's certainly a good thing, because you're leaving your relationship and your engagement with that customer in a better position than simply just retaining the same kind of purchase behavior with less of a margin because you're doing more discounting. So in summary, new customers, reducing or improving the proposition, both through price or value or value, whereby you're able to scale, spend more, acquire more new customers at a reasonable rate, or on the repeat side, expand the behavior, not just pull it forward. That's probably the broader summary of what we kind of saw work really well for people over Black Friday. So again, this is the kind of thing where this might be a bookmark, a couple of notes that you kind of set a reminder email to send back to yourself in kind of August, September time, 2025, to whatever extent you're kind of looking at that kind of longer term plan. Give a good sense as to how it looks. The other piece I would probably flag as well, again, I touched on it at the start, this was a weird year considering how Black Friday fell. We'll probably see the opposite scenario next year. But again, because people were largely tracking potentially down year on year, at least in the context of that kind of Black Friday peak, if that's what they were relying on, people went a lot earlier. Now, ultimately from there, that's naturally a balance to kind of find, because you want to make sure you're not too reliant on the 29th of the month. Like, how scary and daunting is that if all your kind of full month relies on a day where you're coming into a weekend and then you're into December. So, it can be make or break. And I think both your general purchase behavior and what other people are doing, and then also as well, a need to kind of protect against that problem. I think that's both of those kind of meant that people went typically a lot earlier. Some people, for a lot, I would say most, it actually worked well. And it meant they didn't have as much reliance. And then they saw a bit of a peak at the end, which was great and helped them get ahead for the month. And actually, considering the fact that the weekend ran into December, it was a great start to December for most people. As for those first 1 or 2 days between Sunday and Black Friday, they were definitely ahead of themselves as compared to where they would have been otherwise. But from there, I suppose, broadly speaking, how do you kind of look at that for next year, I suppose? So really, I would say it comes back to kind of, Moise Ali made this point in a podcast last year, share of wallet. If they have a certain budget for Black Friday, it's all well and good to say, I'm going to wait later. But if it's a case where they've spent the allocated budget on a competitor brand, you're going to maybe feel that pain a little bit more. So I think it completely depends on what your kind of, customers' alternatives look like, and what are brands in your sector doing. Are they making a decision between you and someone else? Are they making a decision between you today and you in 6 months? I think it's important to be very reflective and honest and, not overly optimistic, I would say. Reasonable and rational, of course, as to like exactly where you sit in the mind of that kind of majority of customers that need that extra push on BFCM, and that ultimately hopefully put you in a good position. As we finish up, there's a couple of things I want to touch on. Year-end strategy. So now we're in touching distance of the end of the year. What do we do from here, and how can we kind of figure that out? So as number one, I would say looking at brands who are behind on sales, but ahead on profit. Naturally, even through our kind of rose-tinted glasses of profit, we understand that there's multiple decision points at play there, and it's not always about optimizing for pure profit. That's not rational and realistic in a lot of cases. It's certainly a situation whereby you want to set your business up to enable you to focus on that. But inventory constraints, the willingness to look at new customer acquisition for next year, we're not, unless you're selling the business on the 31st of December or valuing the business, even if that is the case, you need to have a longer time horizon to ensure the sustainability of the business. So realistically, with that in mind, there's other considerations. So if it's a case where those considerations may look like inventory sell through, your profit is going well, but I actually have a lot of stock there that I want to turn back into cash in as responsible a way as possible. This is going to be your opportunity to do that. Take the hit in terms of kind of contribution margin or kind of gross profit to whatever extent is reasonable. Looking at those last minute campaigns, and naturally, as expected, that's going to be oriented towards gifting. So I think more so than that, I think put it on a platter whereby those bundle offers, using kind of they don't have to be kind of presented gift sets or stuff like that if you're a product that kind of allows it. But how can you kind of increase the proposition so that you can actually drive more sales, improve conversion rates, but also as well give your ads a better thing to shout about. If they have something better to shout about, they'll tend to drive sales at a lower cost, which is again going to be feasible. I suppose ultimately as well, if you're looking at a kind of a larger range of SKUs, you're going to have to look a little bit deeper and understand what you are and aren't focusing on. So ultimately, one of the benefits of the likes of Meta and Google is it's going to optimize towards the types of, I suppose, products that are driving conversion value, and the product feed management, even as a default, is a lot better than it had been in previous years, which is great. The challenge for that is it doesn't really represent and appreciate inventory to the extent that it should. And also it doesn't represent and factor in that profitability. You might have a campaign running on Google that needs a 3 ROAS or has a target ROAS of 3, but in situations whereby you have a product that needs a 3.5, that's not going to work for that. Or equally, you might have products in there that only need a 1.6. Okay, well, in that case, realistically, I actually don't, I don't need a 3, and I'm happy to spend as long as I'm driving a smaller profit. If I'm driving a profit, it's not maybe as much profit as I would like in usual terms, but on the sum of its parts, I will generate more profit overall if it can start to shift those products. So looking at some of those maybe underperforming SKUs, putting them, in a separate kind of whatever it could be, like a Performance Max campaign, Advantage Plus catalog ad, and focus on maybe offers around that. Ultimately, you might see different CPAs than you will, because if Meta has the advantage of looking at kind of all your product range, then it's going to find the kind of products that are driving the best performance. But again, you're maybe willing to see a higher CPA or in turn a lower return on ad spend. Not only because the product can support it, but you need to do it because, again, you have stock to kind of factor in there. I suppose the other side, you have brands ahead on sales but lagging on profit. Ultimately, one thing I would look at there, especially on the new customer basis, is are you first order profitable? If you're not first order profitable, every time you sell a product, you're kind of reducing your profit pile that you're trying to build. So let's say you're making kind of €10 of profit or $10 or £10 of profit on that first order. Ultimately, if your customer acquisition cost is 15, 10 minus 5, so profit after marketing cost is leaving us with minus 5. And therefore, while we're driving sales, we're driving revenue, ultimately we're kind of minus 5 down. It's like we're lending €5, $5 to that customer, waiting for them to come back. But in the short term, it's reducing that profitability. Realistically, if you want to optimize for profit in the short term, maybe you're not willing to do that. You want to kind of put some limits on your ads to say, okay, well, I'm only willing to drive sales if it's a case whereby it's able to ultimately do so in a way where, it's not costing me any more than that €10. So that's something to factor in. But broadly speaking, with that discounting, maybe it's a case where, again, that kind of bundling and upsells can be a good opportunity to give yourself more of a CPA to work with. So for example, you might not drive the same volume, but if you're kind of pushing people towards kind of a cart, let's say, with, €20 of profit on it, then okay, great. There's not as many people, but anyone that does come, we can spend as much as €20 to acquire them and stay break even. Allow our repeat customers to drive that kind of contribution margin or contribution profit, but make sure our new customers are paying for themselves, kind of setting ourselves up moving forward. Finally, as well, I think one other piece that in terms of broader tips that we would typically look at is diversifying channels. Ultimately, you can see what channels you under and overperformed in. People are going to be looking at SMS. But again, as kind of another category, especially across the EU where it hasn't been as prevalent. When you're looking at new channels, the one thing I would say as well is put it all in a bucket of kind of testing and experimentation. Most of the time, people would, as long as they're kind of covering their bases, I would say, with channels that are kind of strong to drive new customer growth, and then ultimately as well are good enough to drive repeat customer sales and retention. Maybe you're better off, as long as you're covering all your bases, you may actually be better off sticking with those, doing them better, rather than trying kind of new tactics and techniques. So especially kind of app-driven ads are kind of really bubbled up in the last couple of weeks and months with platforms like AppLovin in the US, whereby e-commerce businesses are seeing a really good returns on a platform, and that ultimately, is a new audience for a lot of people who maybe aren't as engaged with kind of Meta, Google, TikTok ads, in the form of kind of online, iOS games. So with that in mind, ultimately that's a particular segment. One thing it hasn't really proved out yet is, are those returns sustainable over time? Is it just because we have so much ad space and ad kind of supply, it kind of, in that case, but not necessarily a supply of advertisers to fill those spots? So ultimately, as those ad costs go up over time, it's going to change the economics, and does it actually work sustainably? That's all to kind of be gained. And I would say for the most part, I suppose once you're covering your bases, you might be better off doing the core basics and fundamentals right before kind of looking at this new kind of shiny thing in the distance, or looming, I suppose, whatever the case may be. And I suppose broadly speaking from there, we're going to put, fight our own corner as well on the profit orientation. Try to kind of pull this all together and set yourself up for 2025 in as best a way possible. Oftentimes, what I think that often represents is to figure out, okay, number one, what's my overall sales goal? So set that as kind of a North Star and figure out allocating based on your cost of goods margins, based on things like your operating expense of the business, your profit, what does that actually leave over for marketing? So really working kind of profit first in that way, treating profit as a cost to be paid within the business, and then using that to determine how much can we spend and what's the return we need on that spend. And very quickly, that back of the napkin maths will be able to give you a clear indication as to whether your plan, you actually have enough scope to spend the amount you need in order to achieve your goals. Again, that's definitely a starting point, I would say. We do have a really, really helpful growth planning tool, our order profit calculator we've just launched. I'm going to leave that in the description as well, as that will, I think, be a really helpful resource for people looking at those kind of new year plans. Kind of setting those core numbers, the outcome of that should be, here's how much I can afford to spend in order to achieve my goal. Here's the return I need on that spend. Is that reliable or not? And then from there, kind of going down from a macro to micro, at least in the context of your own business, what's the gross profit per order I need to, generate in order for me to not only generate enough profit on a per order basis that kind of filters up overall, but gives me enough space to spend on the ads. If again, I can kind of construct a cart that I can reasonably drive volume at a €20 gross profit per order, then again, it's giving me scope to spend. And oftentimes it's not a case of just coming into 2025 and having kind of a wishful thinking plan as to, okay, here's how much I'm going to reduce my CPAs. If there's certain clear opportunities for improvement there, great, you can do that and you can see the benefits from it. But oftentimes it might be beneficial to say, okay, what can I do to actually justify that higher CPA? Can I drive people towards, again, that higher cart? Can I look at repurchase rates to the extent that I can stage manage that experience for the first couple of weeks and months after that first sale? And with that in mind, do more, see more value from that customer. So again, it's all working back from those kind of key principles. Here's what I want to achieve, both on a sales and profit basis. Here's what I'm willing to spend in order to achieve it. And here's how that breaks down on a per order basis, and everything, whether it's campaigns, creatives, your product mix, your cart and kind of checkout experience should all serve that kind of core goal. So if that's something you want to help with and you're not currently a StoreHero customer, then please feel free to download that tool, sign up for a trial, and actually use it as a free audit. Really, it's probably a little bit too generous at this time of the year because it's so beneficial for that trial to have a look at the profitability and performance for the last couple of weeks, because it sets up well, it's probably something that our investors should be saying we should be charging for, but for the foreseeable, that's something we want to include, at least in the short term. So again, make sure to get on that as quickly as possible. For existing StoreHero customers, get in touch with us. We're happy to walk through it with you. And we have some really, really exciting stuff launching in the new year that everyone we've shown it to is incredibly impatiently waiting for it. So that's always a good sign that we're onto something there with some of our kind of StoreHero 2.0. So that's enough for that at the moment. I'll get in trouble for talking about it too early, but it'll certainly light a fire under us to kind of keep things moving and have some exciting stuff to launch in the new year. So yeah, thanks again for taking the time. Hopefully this was beneficial. I was conscious of kind of being too up in the sky with too many kind of broader Black Friday results. I was like, what does that have to do with me? You need to kind of balance the kind of economist head with your kind of tactician implementation head in e-commerce, as well as being kind of jack of all trades. So hopefully that was helpful. Again, as I said, please do get in touch. We'd be happy to help. And best of luck for the end of the year, and wishing everyone a happy Christmas, New Year's. Keep in kind of contact in terms of all our content that we'll be going kind of through over the next couple of weeks to kind of set people up for 2025. And yeah, looking forward to kind of kicking in then and talking to much more people then. Thanks a lot.